every seminar, we also do a market update. What I want to show with this market update, we've got the monthly stats, and then we've also got the year-to-date stats, which will be on our next screen. I will zero in on two rows here: total sales and average price. I mean, if you look at August this year compared to August last year, we're almost through the end of the month, so you can pretty much guarantee these numbers. We're only up, or we're down 0.5% in total sales, which means we're starting to see the sales slow down. The effects of those interest rate rises that have happened is starting to affect the market, and sales are slowing down a little bit. What it's doing is it's bumping the lowest qualifiers out of the market. So if people who are just barely qualifying for these houses or townhouses or condos, and then the rates go up by a whole percent, which happened last time, they're bumped out of the market for a while. They either have to go and earn more money, get their credit score up, or save up more of a down payment. Average price, we see that still rising, but it's less than 1% this month. We'll show what it is over the year to date, which is very, very healthy numbers compared to any year. But we can see the market starting to slow. And what we're going to see in in September is another interest rate rise. And that might slow it down even a little more. Now, just because the market's slowing doesn't mean you got to get out of the market. You know, we're going to see more deals coming up, and you won't have to fight for properties. There's going to be less multiple offers.
Yeah, we actually have been looking forward to this slowdown a little bit. And when we say slow down, this is a normal market for us now. It was just absolutely crazy. We're talking 20, 30 offers on one property. But the problem we're still having is inventory. Even if Tim and I wanted to go out and buy you and find you the right house, we're so selective on what we choose for our clients that I could honestly say if you're in the $400,000 to $450,000 range, there is nothing on the market that we would touch right now. So we're actually waiting on properties to hit the market. And Tim, we saw a good one in North Glenmore
just last week.
And we know when a good property hits the market because we've got about 50 clients on automatic emails. So as soon as a good one hits, everyone's texting, saying, hey, what do you think of this one? And we're like, okay, we'll go check it out. We went and checked it out, and it was a good property. It needed about 30K worth of work, Tim.
Yeah,
it came on for 420, needed about 30K worth of work. So you would have been in for 450 in North Glenmore with the single car garage, legal, suited duplex. It's probably worth 530 at the end of the day. So there was equity to be made. And sure enough, the clients, and that's the good thing why we do the market update, they paused a little bit. So we're not pushy agents, right? We're there to say, yes, this is a winner. I would buy it all day. I would buy it with you, and I would own this myself. So they're the types of properties we're buying. And sure enough, by the Monday came around, we had 3 people that wanted to put the offer in, and it had sold. So you can't drag your feet. Even though we're telling you that the market, there's nothing on the market, Tim, when they come on the market, the good ones are gone.
And if you look at the row there, active listings, if you look at August 2020, there were 6,800 active listings. August 2021, there were 6,400 listings. August of this year, 5,000 listings. So we're seeing basically 2,000 less listings on the market right now. And the amount of listings that are going to fit within your criteria of the rental property that you're going to buy are very, very few right now. So if you're looking for a suited property in the 400 range in a specific area of the city, your choice is going to be very, very small. So we always ask our clients these days to be patient, because we have to wait for those good properties to come up sometimes.
Yeah, and just one thing again on interest rates, we're not really worried about the next interest rate rise because the properties that we're buying, we're factoring in the cash flow to cover those costs. So if you're using that as an excuse, you have to try again, because it's the profit margin is just too great for you to sit there and say, well, I'm worried about interest rates.
Yeah.
And Danielle can talk a little bit about that as well.
But right before we get Danielle up, we'll look at the year-to-date stats. Total sales, can't see it's behind the screen. We're at 18.5% total sales this year compared to last year. So that's a very, very healthy increase. And that's actually what's eating up a lot of the inventory is people are buying, more people are buying this year. And the average price, it's at 522 right now. So that is very, very healthy. But again, this is usually where average price peaks and then it starts to go down a little bit in the fall. But it's still a 5% increase over last year. So year to date, Calgary's doing very, very well.
Yeah, no, it's going great.
Yeah, so we'll ask Danielle to come on in and give her mortgage market update. For those of you that don't know, Danielle is our mortgage market specialist. She doesn't just write a mortgage for you. She helps you develop a real estate investing plan so that you can buy more than one property. So go ahead, Danielle.
Thank you guys for the intro. Yeah, as Tim mentioned, obviously interest rates are playing a factor in what's happening in the market, as you know, Calgary and other places. Funny thing enough is that banks have maintained their, talk about fixed rates first, but banks have maintained their fixed rate at kind of that low mid 5% range. But a lot of the trust companies over the last month or so have actually dropped to the mid high 4% range. So it doesn't really make the news per se, because everybody tends to be fixated on the Bank of Canada and the overnight lending rate and the prime rate. But the good news is that fixed rates have come down almost an entire percent at some of the lending institutions in the last month, month and a half. Now, not to be negative Nelly, but we are seeing bond yields increase. So we are expecting interest rates to kind of continue to creep up again in the little, in the near future here because of the bond yields. And then something else to keep in mind too is the Bank of Canada does meet in September, and we are still anticipating a slight increase to the overnight lending rate, which means the prime lending rate might increase as well. So we do want to monitor interest rates. Anybody that has actually been pre-approved already, you should reach out and kind of get that pre-approval updated, just to make sure that if those stress test qualifying rates change, that your pre-approval doesn't change, because that stress test rate is only locked in once you actually write an offer on a home. So yes, Calgary is doing fantastic. Rate-wise, we're thinking rates are going to come down again. 12, 18, 24 months is kind of the prediction. We can't see rates continue to rise for too much longer, but for anybody that is purchasing right now, there is a little bit of a sweet spot here before we see rates go up with the trust companies in that mid 4 to high 4% range. So switching topics now, tonight is obviously about goal setting. So one of the first things you must do as an investor in real estate is to make sure that you're actually ready and able to start investing. So setting goals is one thing, but being able to achieve them is another. Okay, so questions. Have you talked to a mortgage broker yet to see what your options are for financing? Have you had a plan laid out for you with how many properties you can realistically qualify for? Do you know what your maximum price point is for each of those properties, or how much down payment you need to have saved up for each of those properties? Have you had your credit checked to see if your credit score meets the minimum requirements and to make sure there's no errors and that your credit history is reporting properly? Do you know at what point in your investment journey you're going to actually need to bring in a JV to help you accumulate additional properties? And do you know what that's going to look like? So these are all critical questions that you have to ask yourself up front. The keywords being up front. You can set your goals, absolutely, and set them high. Always aim as much as you can to succeed and purchase as many properties as you want. What it comes down to, though, is making sure we have the right plan so we can say, okay, you can purchase 3, 4, 5 properties on your own. Then we need to bring in a JV. Well, then you can realistically start thinking of who might be a great JV partner that you know. You can start planning ahead to be achieving those goals. If I can't tell you how many times people come to me and they'll say, well, I already own 2 or 3 properties, but I want to continue investing. Well, if your plan wasn't set up properly, that can really hinder how many properties you can actually qualify for, because depending on the lenders you've gone to or the products you've gone into, it may affect what you're able to do. I had a client who came to me who wanted to, just came up for renewal, just locked into another 5-year fix, but we need to refinance them to extend the payment or the amortization out to lower the payment, to take out the equity to use for the down payment on the new purchase. Well, now they have to put their plan on hold because they just locked in. So knowing what that plan is, knowing how many properties you can accumulate, knowing what order we need to do these properties and in what price point is really going to be critical. You do not want to go house hunting with Tim and Azad and find the perfect investment property only to find out we don't qualify. So the money talk with your mortgage broker is honestly the first step to your investment journey after, of course, you set your goals. So we can lay out a plan. We can use current income. We can use projected income if you've got a 5-year plan. How much do you think you'll be making in 2023, 2024? What does that look like for you accumulating multiple properties over multiple years? We can use what price points we're looking at. We can use debts. What do you think you're going to have paid off? What new debts do you think you're going to have? So this is all a relevant conversation and things you need to be asking yourself, questions you need to be asking yourself so that you can make sure you have all of the answers up front prior to starting investing in real estate. So if you haven't had this conversation yet, make sure you reach out to make sure that the goal setting you're doing with Tim and Azad is going to be successful. And that is it for today.
All right, thanks, Danielle. Great info as usual. If you guys want to reach out to her for a refinance or just find out where you are financially, when you can start going on your next investment property, she's going to put her contact info in the chat, and by all means, reach out to her.